with
And with inflation
inflation
still
still
above
above
target.
target.
Yeah.
How restrictive are rates at the moment?
I would call them modestly restrictive. They're not overly restrictive. And I think that what we have to be careful of is rebasing our decisioning on rates. And I think the markets do this because, look, I'm a former banker. Bankers and bank clients, they love low credit rates. They like lower rates because they can perform better on their capital base. So I understand that piece, but I think we talk about being range bound to a degree. The experience of the last, let's say, two or three shocks. So you had the '08 shock, you had the 2020 pandemic shock. You're pushing rates down to de minimis levels. You probably don't want rates down there that low because if they're down there that low, you're trying to pick something off its back. And so you're trying to create a rate environment that creates stimulus. So I think right now, we seem to be in a really good place. And so it almost becomes more difficult in the debate on rates, whether they should be higher or lower, when you're at the margin versus when you're trying to use monetary policy as more of a blunt force instrument to try to pound a high inflation rate down like we did in the 22-23 cycle. So it's actually going from kind of a blunt force tool to actually more surgical. And then the debate gets very interesting about where that you should turn those dials relative to the data that you're seeing.